Like and subscribe and click the bell icon to get new video updates.
Asx tumbles ahead of ABA meeting. Qantas jumps on profitability forecast. Australian shares fell more than 1% on Monday in broad-based selling, as investors braced for a central bank policy meeting where it is widely expected to hike interest rates for the first time in more than a decade. Asx 200 was down 1.6%, to 7,315, at 12.21 p.m. Est. Almost every sector was lower in early trade, with the information technology sector leading the losers. Xero dropped 4.9%, to $91.56, while Tyro was down 3.6%, to $1.21. AGL Energy was down 0.4% on news that it trimmed its profit forecast for fiscal 2022, due to a hit from the shutdown of a unit at its Loy Yang A power station in Victoria after an electrical fault with a generator. However, Qantas jumped 3.6%, to $5.80, after announcing that it expected to return to profitability in financial year 2023 to 24. And launching its direct routes from Sydney to London and New York from 2025. The company said it is experiencing strong return to domestic demand and recovery in international travel. It said it expects underlying earnings before interest and tax to be between $450 million to $550 million for the second half of the 2022 financial year. Shares of Abjet and Flight Centre were also up by 2% and 1.8% respectively. U.S. stocks tumble on inflation concerns. Wall Street equities closed sharply lower on Friday with the latest economic data and Amazon's disappointing quarterly report and outlook keeping the spotlight on surging inflation. The Dow Jones Industrial Average fell 938.99 points, or 2.77%, to 32,977.4. The S&P 500 lost 155.58 points, or 3.63%, to 4,131.92, and the Nasdaq Composite dropped 536.89 points, or 4.17%, to 12,334.64. The Nasdaq showed its biggest monthly decline since October 2008. Amazon shares closed down 14% after the e-commerce giant delivered a disappointing quarter and outlook late Thursday as it was swamped by higher costs to run its warehouses and deliver packages to customers. Equities were under pressure after data showed that monthly inflation surged by the most since 2005 while U.S. consumer spending increased more than expected in March amid strong demand for services. Also, first quarter U.S. labor costs surged by the most in 21 years, pointing to rising wage inflation, supporting Federal Reserve policy tightening ahead of its scheduled meeting this week. Ian Lingen, head of U.S. rate strategy at BMO Capital Markets, notes that the data could lead to a more hawkish response from the Fed. The operating assumption in the market at the moment is that the Fed has sufficient flexibility to ratchet up the pace of hiking in response to any further acceleration of inflationary pressures, he said. The Pan-European STOXX 600 index had risen 0.74%, but MSCI's gauge of stocks across the globe shed 1.9%. On the last trading day of April, the global index was on course for its biggest monthly decline since March 2020. ABC Reuters posted 2 hours ago, updated 12 m ago.